Good morning. My name is Tom Shelton, and I'm founder and CEO of PeopleCapital. PeopleCapital is a student loan company that has both a pure lending platform as well as a human capital score. And that human capital score is a separate business, a separate web service. At its core, the human capital score measures the value of an education in purely economic terms. And it can be used for a wide variety of problems, whether financial, academic, financial aid, et cetera. So today, I'm going to start off and show how the human capital score is integrated into our pure lending platform, as well as how it can be applied to a kid trying to go to college and make tough decisions. So first, let's log in as a lender here to PeopleCapital. We're here in the lender dashboard. And as you can see, there's a variety of widgets. Each one of these widgets drills down into a specific area like loan performance, active loans, et cetera, as well as auto bids. And that's something I'd like to show you here today. A more efficient way of bidding in this pure lending version 2.0. So first, let's look at how, let's look how traditionally browsing has been done. We'll look at Richard from Yale, and we have the standard information, credit information, as well as how the human capital score integrates into this particular application. It's very important for an investor who's going to put money into a student to know what the high, the low, and the predicted income will be. It's a very unique piece of information that supplements the traditional credit information. All of our loans have at least interest-only payments of $50 a month, and that allows for a very tight feedback loop that's completely different from a traditional student loan company. And that feedback loop allows us to prove our model in a very short amount of time, months, not years. Now, we could go through and just place a normal bid here, but let's do an auto bid, something that's a bit more automated. There are over 30 criteria by which a person can do an advanced search or create an auto bid. You can use one of them, or you can use several to hone your specific goals in mind. So let's go and expand all these filters and quickly take a look at all of the categories. We can drill down by geography for the borrower. We have geocodes for banks who want Community Reinvestment Act credit, which is an innovation of our platform. You can drill down on the co-borrower information by geography, income, debt to income, their occupation, et cetera. And from an academic perspective, there's very detailed information about how you can limit and search based upon a student's scores, what they're doing in college, what particular high school or college they're going to. And this allows for people to execute specific underwriting criteria. But the part that is most important to me is the credit risk. And I am going to put in human capital score of 6 to 9, and from credit risk of A to C. And this is an Experian credit grade, so we have both traditional mixed with FICO, and I'm going to choose interest-only balloon loans, and I'm going to save this as an auto bid. There's some very simple additional steps we fill out here. You put in the sake of time, we'll just type through. We want to allocate $100,000 and an interest rate of 12%, and we'll choose simple option A of $1,000 per matched loan. And there you have it. Your money is being deployed. You don't have to sit around, browse through loans. Who has time for this? From the beginning, our platform was built with institutional investors in mind, and based upon our team and the platform and the types of features like this that allows a sophisticated investor to deploy a lot of capital and to meet their underwriting criteria at the same time. So let's move on to another part, which is the human capital score scenario analysis. Imagine you're a college student applying to school, and this scenario takes into account one student that's applying to 5 different schools. I won't go into all the detail, but there's ITT Technical Institute mixed in with a history major, mixed in with a Princeton student. And it allows you to run and compare all of the different income likelihoods, the middle path, as well as a graph, and ultimately seeing down here, again, the volatility year by year. And you can see here at the top is someone that's majoring in engineering and finance, has a very narrow, stable, high income path. And someone down here in scenario number 3, they're at a liberal arts school focusing on history. And so there's a lot more uncertainty about what they'll ultimately do. Will they go to law school? Will they not? Our model takes that into account and shows the higher volatility of that and the likelier risk of maybe not being able to pay the debt of the loans. The average debt that an undergraduate graduates with is $30,000 or more. So we're trying to provide these tools to both students as well as financial aid counselors, admissions consultants, financial planners, et cetera. Use this as an additional tool to weigh the cost and benefit of any one education, and for them to be able to negotiate with a college admissions office and perhaps get a better deal for financial aid. But most importantly, to help wisely use debt if it makes sense for an education. And we hope that we can help people build their human capital while mitigating risk for lenders. Thank you.